Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bio-Techne Corporation quarterly report. Bio-Techne Corporation offers a diverse range of life science reagents, instruments, and services for various markets worldwide. The company operates through two main segments: protein sciences and diagnostics and spatial biology. The protein sciences segment provides biological reagents used in research, diagnostics, and cell and gene therapy, including cytokines, growth factors, antibodies, small molecules, tissue culture sera, and cell selection technologies. This segment also offers proteomic analytical tools for protein analysis instruments and immunoassays. In addition to the protein sciences segment, Bio-Techne Corporation's diagnostics and spatial biology segment develops and manufactures diagnostic products, including controls, calibrators, and diagnostic assays for regulated diagnostics market. The company also sells genetic carrier screening kits, oncology diagnostics, molecular controls, and research instruments and process control products. The services provided by the company include exosome-based molecular diagnostic assays, advanced tissue-based in situ hybridization assays for spatial genomic and tissue biopsy analysis, and genetic and oncology kits for research and clinical applications. The stock price of Bio-Techne Corp has experienced a slight drop in the past year due to several factors. One major reason was the company's disappointing fiscal first quarter 2026 earnings report, which led to a 12.85% decline in its stock price on November 5, 2025. The reported earnings per share of $0.42 and revenue of $286.6 million fell short of analysts' forecasts. Another significant event that contributed to the drop was the company's October earnings report, where shares plummeted by 11%. Although Bio-Techne reportedly beat estimates, investors were concerned about the potential negative impact of significant AI infrastructure spending on near-term profitability. This anxiety led to a decline in investor confidence and subsequently affected the stock price. The decline in North American revenue, despite growth in Europe and Asia, also played a role in the drop. The mid-single-digit decrease in North American revenue was a concern for investors, contributing to the overall decline in Bio-Techne Corp's stock price. Bio-Techne Corporation maintains a market capitalization of $11 billion, broadly in line with the industry peer group. Bio-Techne Corporation trades at a higher price-to-earnings ratio of 130 times and a higher price-to-book ratio of 5.55 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a company can be attributed to several key areas. Firstly, the protein sciences segment saw a significant increase in net sales, with a 149% rise to $416,086. Additionally, the diagnostics and spatial biology segment experienced growth, driven by increased demand for specialized proteins, immunoassays, antibodies, reagents, blood chemistry and blood gas quality controls, and hematology instrument controls. Furthermore, revenue growth was also seen in consumables, instruments, and services. Consumables revenue grew due to sales of specialized products, while instruments revenue followed a similar trend. Service revenue increased due to extended warranty contracts, post-contract support, and custom development projects. Royalty revenues also saw an increase, with a 5.12% rise from CONE 2024 to CONE 2025. Geographically, the company experienced growth in various regions. EMEA, excluding United Kingdom, revenue increased by $4.962 million, 7.06%, from CONE 2024 to CONE 2025, while APAC, excluding Greater China, revenue saw a rise of $3.732 million, 19.65%. Greater China revenue also experienced growth, with an increase of $1.597 million, 6.48%. On the other hand, the primary drivers of revenue decline can be attributed to several factors. Firstly, intersegment revenue decreased by $1,076. Additionally, business held for sale resulted in a decrease of $479. Instruments revenue saw a decline, with a 4.11% drop from CONE 2024 to CONE 2025. Services revenue also experienced a decline, with an 18.45% drop from CONE 2024 to CONE 2025. Geographically, the company's United States revenue decreased by $13.349 million, 8.33%, from CONE 2024 to CONE 2025. The Diagnostics and Spatial Biology segment also saw a decline in net sales, with a 4% drop in Q4 and FY. Net income and profit margins experienced changes in the quarter and 6 months ended December 31, 2025. Net income increased by 9.6% for the quarter and 11.5% for the 6 months compared to the same periods in 2024. However, gross margin declined slightly from 65.3% to 64.7% for the quarter, and from 64.2% to 64.8% for the 6 months. On a more positive note, operating income margin improved significantly, rising from 16% to 18.5% for the quarter, and from 14.9% to 17.6% for the 6 months. Segment profit margins also showed variations across different business segments. Protein Sciences experienced a decline in profit margins, while Diagnostics and Spatial Biology saw significant improvements. The reasons behind these changes are not explicitly stated in the provided summary. However, it can be inferred that the company's performance was influenced by various factors, including market conditions, competition, and operational efficiency. The company's financial performance indicates a positive trend in operating cash flow generation. The data shows that the net cash provided by operating activities has been consistently high over the past 2 years. In 2025, the company generated $109,996 and $148,235 in 2024, demonstrating a stable increase in operating cash flow. A closer look at the 6-month period ending December 31, 2025, reveals that the company's operating activities provided $110 million in cash flows, while the same period in 2024 yielded $148.2 million. Although there is a slight decrease in 2025 compared to 2024, the overall trend remains positive, indicating that the company is generating sufficient operating cash flow to support its business operations. The company's debt level and interest expenses have undergone significant changes in recent times. A notable decrease of 32.6% has been observed in long-term debt obligations, indicating a reduction in the company's financial burden. Furthermore, outstanding debt under the credit agreement also decreased from $346 million to $260 million between June 30, 2025 and December 31, 2025. In terms of interest expenses, there has been a notable decrease in interest expense from forward-starting swaps, which dropped from -$2,155,000 to -$757,000. Additionally, total interest expenses for the quarter ended Dec 31, 2025 decreased by $23,000 from 2024. However, it is worth noting that interest expense from cross-currency swap remained unchanged at -$660,000. Overall, these changes suggest a reduction in the company's financial obligations and expenses. The performance of various segments within the company was mixed in the recent period. On a positive note, Protein Sciences stood out as one of the top-performing segments, with net sales reaching $215,084 and segment operating income totaling $84,615. The overall company also showed strong results, with consolidated net sales of $295,000, $877, and consolidated operating income of $54,461. In contrast, diagnostics and spatial biology was a segment that struggled during this period. Despite generating some revenue, the segment's net sales were only $81,180, resulting in an operating income of just $8,432. This underperformance highlights areas where the company may need to focus its efforts to improve results. Management is optimistic about the company's future prospects, citing a positive outlook driven by investments and acquisitions. The company's growth strategy focuses on expanding its core business, capitalizing on emerging markets, and innovating through strategic partnerships and acquisitions. A key component of this plan is the acquisition of Wilson Wolf, with management aiming to complete the purchase by December 31, 2027. The company has outlined several strategic pillars to drive long-term growth and profitability, including delivering exceptional customer experiences and developing a transformative culture that fosters employee development. Management also expects to meet its cash and working capital requirements for operations, facility expansion, and capital additions, ensuring the company's financial stability in the foreseeable future. In terms of accounting standards, the company will adopt new guidelines from fiscal 2026-2029, which may increase disclosures, but are not expected to significantly impact reported income statement expenses. Overall, management statements convey a sense of confidence and commitment to driving growth through strategic investments and acquisitions. The company's financial records indicate a history of dividend payments. Specifically, cash dividends were paid out on September 30, 2024, and December 31, 2024, in amounts totaling $12,688 and $12,736 respectively. Furthermore, the company has confirmed paying dividends for both 2025 and 2024. This suggests a consistent practice of returning value to shareholders through dividend payments. Concerns about inventory buildup are evident in the recent financial data. The company's inventory levels have increased by a significant 7.4% from June 30 to December 31, 2025, amounting to an additional $15.8 million. Furthermore, long-term inventory has also seen a modest increase of $224,000 during the same period. The cost of sales for various departments, including protein sciences and diagnostics and spatial biology, indicate possible inventory buildup. Specifically, the cost of sales for fiscal 2025 is higher than that of fiscal 2024, suggesting that the company may be holding onto excess inventory. Additionally, costs recognized upon sale of acquired inventory have also been increasing, with a quarterly average of $185,000 and a 6-month average of $373,000. These trends suggest that the company's supply chain may be experiencing some disruption or inefficiency, leading to an accumulation of inventory. If left unchecked, this could potentially lead to further financial implications for the company. That concludes the financial summary for Bio-Techne Corporation. Feel free to comment below, and I will be happy to answer them when possible.